Good evening, ladies and gentlemen. On behalf of Sunil Securities, I extend a very warm welcome to all of you in Heritage Food Post-Result Q3 conference call. Management team is being represented by Mr. Dr. M. Sambasiv Rao, President, Ms. Brahmani, Executive Director, Mr. A. Prabhakar Naidu, CFO, Mr. Samba Murthy, Delhi Division Head, and Mr. Umakant Bari, who is the Company Secretary. I trust you must have got the opportunity to go through the numbers. Company has delivered a pretty stable number in this challenging environment. In order to put more highlight and address your queries, now I would hand over the call to Dr. Rao. Thank you, and over to you, Dr. Rao.
Good afternoon to all the participants. I welcome all of you once again for the earnings call of Q3, financial year 2019. I'm happy to announce the quarterly results. For Q3, standalone numbers, we have achieved a turnover of 610 crores, which is a 6.7% growth over the previous year's corresponding quarter, which was 571 crores. For this quarter, EBITDA achieved is 45.5 crores, which is a 23% growth over the corresponding quarter of last year, that is 37 crores. And PBT number is 30 crores, which is 26.5% growth against 23.75 crores last year. PAT is 19.5, the 30% growth over the last year. Coming to 9 months performance of the standalone dairy and renewable energy part of the business, the net turnover is 1,857 crores, which is a 3.76% growth. This is lower because of the Q2 performance was flat, though Q3 achieved 6.7% growth in turnover. Q2 pulled us down to 3.76. EBITDA for the 9 months of the standalone, 140 crores, which is 63% growth over the previous year, 86 crores. PBT is 94 crores for the current quarter, again 66% growth versus 56 crores of the previous year's third quarter. 9 months of the previous year. And PAT is 59.46 crores, which is 49% versus the 40 crores of the last year's 9 months. Now I turn to consolidated numbers, which includes dairy, renewable energy of the HFL, Heritage Foods Limited, and feed business of the Heritage NutriVet Limited, a 100% subsidiary, and Heritage Farmers Welfare Trust. The net turnover is 619 crores, which is 6.88% growth against 579 crores of the previous year Q3. EBITDA is close, 46 crores versus 38 crores of the last year. PBT is 30.6, 25% growth over 24 crores of last year. PAT stands at 20.25 crores, which is 21% higher than last year's Q3, 16.71 crores. Now we look at 9 months consolidated numbers. Turnover stands at 1,880 crores, which is 3.74% growth versus last year's 1,812 crores. EBITDA for 9 months consolidated 144 crores was 89 crores of last year. It is 62% growth. PBT is 96.58 crores versus 58 crores of last year. 66 crores, 66%. PAT is 62 crores versus 42 with a 46% growth. Then we go to volumes. Milk procured during this Q3 is 14.5 lakh liters per day, which is 6.6% growth over last year's Q3, that is 13.6 lakh liters. Milk sales volume is 11.09 lakh liters, which is 5.3% growth. Value-added products grew at 24% in this quarter.
9 months.
Sorry, 9 months. This is a quarterly growth for quarter 3. Value-added products revenue is 134 crores versus 108 crores last year quarter 3. This is 24% increase. Contribution of value-added products revenue is 22% in this quarter versus 19% in the last year's third quarter. For 9 months, value-added products delivered 16% growth, that is 398 crores to 463 crores. The contribution of value-added products during the month period stands at 25% versus 22% of the last year's 9 months. Our current production capacities at the company level, chilling capacity in various locations is 19.37 lakh liters per day. Milk processing capacity is 25.7 lakh liters per day. Milk packing capacity is 17.15 lakh capacities. These are all own capacities besides some small leased premises we are operating still. We have incurred an expenditure of 66 crores under CAPEX in the past 9 months and 10 crores under the Heritage Nutrivet Limited, that is the cattle feed plant. Debt position as of December 31st is 168 crores long term and 80 crores short term. The total 249 crores rounded under the Heritage Foods debt position. These are the details I thought should be enough for appreciating the current quarter's performance. Now we would open the session for the discussion, feedback, suggestions from the participants and any queries related to this quarter. Thank you very much.
Thank you. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touch-tone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Himanshu Nayyar from Systematic Shares and Stock. Please go ahead.
Hi, Mr. Rao, and congratulations on a strong set of strong numbers on the operational side. So first, just wanted to understand our growth, which is 7% this quarter. So can you share how much would this growth be ex of Reliance Dairy, I think, which was not there in the base quarter?
Thank you, Mr. Himanshu. This segregation of Reliance acquired business is now impossible. I have been explaining in the last quarter also. They got merged into our operations at all levels, chilling center level, processing level, packaging level, and they are also in different parts of the country. Some of the volumes have come from Hyderabad, some are in the... Certain volumes are definitely in the new states where we have entered, like Punjab, Haryana, Rajasthan. There we have exclusive numbers available, but many areas they got merged into the system. So we have stopped monitoring that separate accounting, which is typically not feasible to give you exact numbers ex Reliance acquired business at this point in time, and we won't be able to give in future also. That the numbers have got merged seamlessly into the system. Having said that, I would like to give you some perspective of what it is. Our efforts to rationalize Reliance business component acquired during the last year have resulted in reduction of volumes in certain states. As part of our loss control activity, we have been able to exit certain localities both in procurement and sales. and stop the bulk commodity business which Reliance Life was involved in, Reliance Pure was involved in, the Dairy Life and Dairy Pure were doing. Because of that, certain volumes have dropped, certain activities have been reduced. That could have impacted in a little way, because in the quarter 3 of the last year, the rationalization was almost over. This year, quarter 3 has no impact on the acquired business, whereas the H1 to H1, there was an impact. We have cut down substantial revenues and activities in the H1 of this year, current year. So the H1 growth was not visible.
Got it, sir. Got it. That's a perspective. Secondly, for this quarter, I mean, we believe that a lot of cooperatives have become more aggressive and have been selling at discounts, etc. So, can you throw some more light on the competitive intensity from the cooperatives in our key markets, and till how long you think this will continue? Because I'm sure till the time they be this aggressive, it will be difficult for us to grow in double digits, which is our targeted growth rate, correct?
This is quite relevant in the last 9 months. The past 9 months we went through significant glut scenario in the country as such, wherein carry forward stocks of SMP from the previous year to this year were very high. Finally, government had to step in and give subsidies, export incentives, and state-level supports to liquidate the inventory through exports. And the season also aggravated the situation because of the good production year we went through. As the milk availability was very high, with the cooperatives particularly, they had to dispose instead of going through the conversion to milk powder and butter, which we also did. We didn't actively pursue the procurement growth in this season, in the last 8 months particularly. We have slowed down our expansions, and we have also not intensified our extension work, which would have led to higher milk procurement and conversion of milk into powder and butter, leading to lower realizations and lower margins. So we were cautious in this tsunami period to lie low till the wave moves out of us, over us. In the process, we could strengthen our bottom line. If we had looked at the growth, we could have definitely managed to grow by procuring more milk and convert it and sell it as commodities. Because liquid milk sale was not easy during this period for 2 reasons. One, unorganized sector milk is reaching the urban areas in the loose form. That also was available plenty for the institutions and caterers and hotels, etc., those segments. Then the cooperatives have started discounting their prices, and particularly this happened in Tamil Nadu, where the lower price milk quantity was substantially hiked. I'll take a minute to explain here. All the private brands, including Heritage, sells toned milk at 40 rupees per litre in Tamil Nadu. Tamil Nadu cooperative, namely Avin, sells milk at 2 price points, 37 rupees and 34.5 rupees per litre, while others were at 40. So the first level itself, 3 rupees difference is there between 37 and 40. The second level milk, that is 34.5 per litre milk, was a restricted quantity in the previous years. They used to cap about 5 lakh litres, 4.5 lakh litres was made available. Under that monthly card scheme they introduced. A consumer can subscribe for 1 month's requirement in one shot, get a monthly card, and volume and the milk was available at lower price. That ceiling they have removed and enhanced the supplies to, let's say, from 4.4 lakhs to 7.4 lakhs or 8 lakhs. So this surplus milk they disposed through this route. And that came and impacted us, particularly Heritage, because we sell toned milk in Tamil Nadu in large quantity, like Avin. Whereas other private brands sell full cream milk and standardized milk in greater quantities. Impact on those variants is lesser compared to the impact on the toned milk. So this has impacted us in the last few months, where we degrew by about 10-15% in that market. That also impacted our overall growth. Similar situation happened in Maharashtra, where the glut was very high. Milk procurement was easily available, and there are no offtakes. The government of Maharashtra gave 5 rupees subsidy per liter of milk used by the private companies, cooperatives, if they belong to Maharashtra. This is where we had a setback. This 5 rupees per liter was made available only for Maharashtra-based companies, whereas we are Telangana-based company. So we couldn't avail that 5 rupees benefit. So we have not aggressively pursued our growth there. So there also we have degrown significantly in Maharashtra markets in the sale volumes. And the third market was Punjab, Haryana. That sector also had the glut. You might have seen farmers agitating in Punjab and going up to Delhi also, seeking remunerative prices. There also we have faced the significant surplus milk and the price competition. Coming to other states like Karnataka, Telangana, Andhra Pradesh, we have seen normal growth, 10 to 11% volume growth in these markets, where the glut was not significant and markets behaved normally. The competitors and the cooperatives have shown normal marketing practices. There was nothing significant to worry in these markets. So there is a differential growth rates or degrowth in differential markets because of the circumstances and conditions prevailing in those markets in the last few months. And now we have seen for last 2 weeks, in almost all the markets, production, milk availability has got to normal levels, and the carry forward inventory was more or less liquidated by everybody. We see the green shoots coming up in everywhere.
Great, sir. Thanks for the detailed explanation, sir. Just my final question.
Himanshu, I'm sorry to interrupt. May we request you to come back in queue for follow-up questions? Thank you. The next question is from the line of V.V. Bajaj from Bajaj Shares and Securities. Please go ahead.
Yeah, good evening. I have 2 questions. The positive quarter financial trend is very good, appreciated. But a simple comment on that income from non-business activities are very high. Income from non-business activities is high, which is non-sustainable. So I want your comment on that. And the second question is, out of our complete dairy business, fresh milk is one basic sector. Other than that, consumer products and SMP. So how you divide the percentage of total 100% turnover in these 3 categories? That is fresh milk out of total dairy business, consumer products, which is more margin incentive, and SMP. Please. Sir.
Can you please clarify what exactly you mean by non-business revenue? What line item are you looking at?
Other than that, some share activity which is given, which is added, and accordingly your quarterly results are being up and down. So income from this non-business activity other than dairy product, which adds and subtracts in our quarterly result, it is not sustainable in long term. That is one question. Please.
Our CFO, Mr. Prabhakar, will explain to you.
Good evening, sir. Actually, last year when we have demerged our retail business to Future Retail, so they have allotted the shares, actually 1.78 lakh shares.
Yeah.
On that, every quarter we need to value it. Actually, it is in the investment schedule. It has to be fair valued. So actually in the quarterly results, there is actually fair value gain on fair value through P&L, 53 crore 11 lakhs is shown in the income side.
Yeah.
Similar amount is shown in the expenditure side also.
Correct.
On actually 2J, that is the loss due to changes in fair value of derivative. There is no impact on the P&L. So this is, we need to, as per Indian accounting standard, we need to value our investments in equity shares at fair values on every reporting period. So the difference is coming to actually the fair value as on 31st 12. And actually fair valuation on 30th September. Every quarterly difference, it has to be reflected in the P&L, both as an expenditure side and actually income side. The expenditure side is because of actually we need to do some upside sharing to the future retail whenever the shares are sold.
Yeah.
So this is nothing, actually, it has nothing to do with the P&L account because there is no impact in the same, the income side as well as expense side, same amount is shown.
Yeah, that is same, yeah. And about second question about segments of dairy, fresh milk, consumer products, which is high margin value, and SMP, how you segregate?
Yeah, I'll give you a broad strokes. Our revenue from milk will be 65% of the total revenue in the dairy. And revenue from value-added products, which are high-margin products, is about 25%. And the 10% comes from other commodities like butter, ghee, cream, some small quantities of milk powder, etc.
Yeah. So, is there any possibility after Bombay Capex plant JV, Novandai, and along with that the products which are dairy consumer products, it will be increased from 25% to coming quarters by some appreciable amount?
See, we have internally taken kind of certain initiatives to take the contribution from value-added products revenue to 40% in 5 years. On a year-on-year basis, we have been growing 3% in the last 4 or 5 years.
Yeah.
So currently we stand at 25. We wish to go to 40% in the 5 years. Different investments in the value-added product segment, either in the processing, packaging, marketing, front-end infrastructure will help in this.
Yeah.
The product you are referring to with the French company in Maharashtra would not be very significant. It would perhaps give us 30-40 crores per annum kind of contribution in the total revenue.
Yeah.
It's one of the many products that will help in building this 25 to 40% revenue.
Yeah. Thank you, sir. Thank you.
Thank you. The next question is from the line of Bhargav Buddhadev from Kotak Mutual Fund. Please go ahead.
Yeah, thank you very much for the opportunity. So the first question is that there has been an increase in milk procurement prices on a Q-on-Q basis. So just wanted to check what is the reason for this. Is it that we've procured milk from states where the procurement price was already higher, or whether the milk procurement prices in individual states have increased on a sequential basis?
Couldn't follow. Could you repeat, please? You are saying milk procurement price increased from?
So there has been an increase in milk procurement prices in 3Q versus 2Q.
2Q versus?
In this quarter versus the second quarter. So So is this because we have procured milk from states where the procurement prices was higher, or whether in our individual states the procurement prices has gone up in these 3 months?
In quarter 3, there was no significant price hike, except the mix changed. As you identified, one is a geographical mix and also type of milk. See, in this quarter, we typically get higher share of buffalo milk, which is more expensive compared to the cow milk. Unless cow milk is 25 rupees a liter or 26 rupees, buffalo milk will be 38 or 39 rupees. So, winter months, buffaloes yield more milk, so that share will go up. Average prices will look higher. Similarly, the territories, certain territories milk price will be higher, certain territories lower. That share also will show this distortion. But per liter in the same segment, for the same type of milk, there was no price hikes.
Okay. So, essentially going forward, do you see this trend continuing, or this will normalize?
This year, we may have price hikes for the procurement as the season changes now. Upward revision will happen.
Okay. So correspondingly, will we also increase our selling price?
There will be some lag time. Definitely, it will be passed on. The coming months we have to see. There is also, political situation around. The elections are around the corner. So the price hikes may take some time compared to the procurement price hike to sale price hike. There will be some time lag.
Okay. Secondly, sir, you mentioned that in Tamil Nadu, when you sold the toned milk, obviously there was a volume decline because Avin was selling at a lower price, but I believe we've also introduced standardized milk and full cream milk, where competition from Avin is not that higher because therein they don't sell at discounted prices. So how is the response towards standardized and full cream milk, and whether these two products can help us arrest the decline going forward?
Yeah, Ms. Murthy will address.
In both the variants, standard milk and FCM milk, that the volumes are now increasing. It is in the increasing trend.
So, sir, do we expect the volume decline trends to sort of get arrested in FY20, or even in FY20 there will be volume decline in Tamil Nadu?
So we already started growing now. As I touched upon, green shoots are seen now. Maybe it comes in the Q4 discussion. As of now, situation is changing towards growth.
Okay. And lastly, sir, is it possible to share what has been your operating cash flow in 3Q and 9Q this year, and how has it grown on a YY basis?
Operating cash flow. It will be more or less same trend. The last year to this year, you have seen the EBITDA trend and PBT trend. Operating cash flows will be in sync with that, but we could give you separately. Right now, I don't have the numbers.
So the reason why I was asking is that essentially the inventory on the balance sheet would have reduced in December because the prices of SMP have gone up globally. And even in India, as you mentioned, that there was a subsidy given for exports. So that is the reason why I was checking.
Yeah, we could share. We can share perhaps later.
Sure.
But it would be in the same trend. The trend of PBT, EBITDA and cash flows would be same.
Okay. Okay, so I'll come back in the queue. Thank you very much and all the best.
Thank you.
Thank you. Participants are requested to limit their questions to 2 per participant. Time permitting, you may come back in the queue for a follow-up. The next question is from the line of Sangeeta Tripathi from Edelweiss. Please go ahead.
Yeah, good evening, sir. Thanks for this opportunity. Just taking the growth thing, you explained that apart from 2-3 markets wherein you had wherein the environment was not the normal and we degrew, in the rest of the market the growth was in the range of 10 to 12%, 10 to 15%. That is what you look. That is how we have grown. So now with first and foremost, now with things normalizing to a certain extent, can we expect in FY20 this kind of growth at the company level to be in the range of double digit? And secondly, also in these markets wherein you have grown at 10 to 15%, what is the kind of volume growth that we have pegged? If you can give some understanding on the demand environment and the growth momentum ahead.
Yeah, this is Brahmani here, Executive Director. As you rightly mentioned, things are normalizing when it comes to external factors such as milk procurement and competition, etc. So we definitely are targeting double-digit growth, expecting that it's a normal year, the next financial year. And your second question was on the growth in other markets, and the volume growth is also more or less in line with the value growth of 10 to 15%, depending on which state and which market we're looking at.
So for FY20, a double-digit growth can be expected on an organic front, right?
Surely.
Sure. Secondly, just wanted to have some understanding on the inorganic acquisitions, what we were looking out for. So any color or any update on that front would be helpful.
The process is still ongoing. Right now, we're not seriously evaluating any players. Like we said earlier, we want to look at players that will not cannibalize our existing volumes. We're looking at valuations also will make a lot of difference for us. And quality standards are exceptionally important as a company, and as you know, most of dairy sector is unorganized, even within the organized sector in many senses. So right now, EY is still in the process of evaluating potential opportunities for us, but there's nothing serious that we're considering at this point in time.
Okay, because we have again stated and we have reiterated that we will reach to 6,000 crore revenue by 2022. So I thought some concrete or some, there would be some understanding in the inorganic part, because organically we cannot take the levels to 6,000 crores, right?
Yeah, I mean, definitely if we look at any interesting opportunities, we will evaluate them. But you must also keep in mind that this year is more or less a flat year for the dairy industry and for our company included. Of course, in Q3 we are seeing some growth. At Q4 we expect growth to happen because of value-added products, better weather conditions, etc. So the target of achieving the number is still there. However, we might extend our timeline by a year or so because this year has been an exceptional year for the company.
Okay, that's quite clear. Also, the CAPEX...
sorry to interrupt. May we request you to come back in queue for follow-up questions? Thank you. The next question is from the line of Nitin Gosar from Invesco Mutual Fund. Please go ahead.
Sir, you explained about the different states having different outcomes. Would you mind sharing the contribution of those states like AP, Karnataka, Tamil Nadu and North India? On 9-month basis, what's their overall contribution to revenue?
Yeah, I can give approximate numbers.
Yeah.
May not be exactly accurate. AP would be contributing around 30%. And Telangana would be 30%. Karnataka around 10%. And Tamil Nadu around 10%. And the northern states would be around 8%.
Okay.
Thank you.
Okay. And Andhra Pradesh would have seen growth, but Karnataka, Tamil Nadu would have not seen any kind of growth. In fact, they would have degrown.
No. Karnataka has seen growth. Tamil Nadu, Maharashtra and Punjab, Haryana, Rajasthan, that sector is now. These are the 3 pockets where we went through the tsunami.
Okay. And going forward, I think last quarter you discussed about territorial expansion not being the core strategy for FY19 because of the excess milk supply that the system is seeing. Current situation now, the way it is playing out, what's your assessment on the geography expansion going forward?
We continue to operate in the same geographies. We are now actively present in 15 states. We have created infrastructure required, and particularly in the northern states like Haryana, Punjab, Delhi surroundings, we have got 2 plants of our own. We moved out of the third-party packing stations, transitioned from Reliance. We have moved out of them and we started our own packing stations. Rajasthan also we are looking at own packing station, but currently we are operating out of a third party. And all the milk procurement in these states is also now happening. Half of it is happening through our own chilling centers and half is still happening through the franchises. That also will be moving out soon. So we have absolute control on the milk chain from farmer to the consumer, which will help us in improving quality further, and cost management also will be better. So in another 6 months to 9 months, we will have much superior handling capacities in these states, and we will start pushing the volume growth from this summer onwards. So market is changing, the surplus scenario is vanishing, inventories are coming down, summer is going to start, the growth triggers are all in place, and we are also improving our internal efficiencies in those markets. We will see how to grow in the existing states only.
Okay. Got it, sir. Thank you.
Thank you. The next question is from the line of Sandeep Jain from Srinath Investments. Please go ahead.
Hello, sir.
Yes, Mr. Sandeep.
My question is, the difference between selling and costing price of milk in this quarter is around 6.4 rupees per litre, despite surplus milk supply in the market, as you said. So going forward, what price can we expect? Hello?
Yeah, it is something to see. The spread keeps changing based on the procurement price, sale price, and also contribution coming from value-added products. as sale of value-added products increase, revenue per liter will also be showing higher. The liquid milk spread would be more or less same. It can be half rupee plus or minus.
Okay. And my next question is, sir, what is the status of our joint venture with Novandine?
Yeah, the joint venture is progressing smoothly. We are in the process of building the processing facility in Maharashtra, and we're also in the process of finalizing our marketing strategies. There has been a little delay in terms of product launch. We're looking at Q2 of next financial year, Q2 or Q3 of next financial year in terms of launching the product because of several approvals and agreements when it came to the plant design, etc. But everything is on track apart from that.
Okay, and what kind of revenue can we generate from there, from this joint venture?
As mentioned earlier, about 30 crores maybe in the beginning to start with, because we are beginning midway through the year, and also it's the first year.
Okay. Thank you.
Thank you. The next question is from the line of Karthikeyan VK from Suyash Advisors. Please go ahead.
Sir, good afternoon. I wanted a clarification on a couple of things. One is in terms of perspective on fat losses. What would be the break-even SMP price for you to, not incur fat losses at current, product mix, sale price, and so on?
We will have to work out and see how it fluctuates with the SMP price being not static. That is also moving. Right. We can't keep one price static because these are the two products coming out of milk when we convert milk.
Okay.
So both, sometimes SMP gives higher realization and fat also gives higher realization. That's a year where scarcity is around the country. So you get both the products giving a higher margin, higher realization. And sometimes fat prices go down, SMP price remains high. In certain situations, it is converse. So there is no formula which says at what price fat achieves break-even. I mean, it's a very tricky situation. You have to be part of dairy team to understand and help us.
At 2,400, would you still be making losses, sir, or does the equation then become more favorable? Of SMP price. $2,400 SMP price, yes.
$2,400?
Yes, sir.
$2,400. Fat price has to move up. Realization has to move up even then. Even at $2,400 a ton, yes, fat price have to go by another 25%.
Oh, wow. That much.
Another 25%, increase of another 25% of the price of fat will, I mean, in our language, in our prices.
Yeah.
Sure.
Certain.
I think it really depends on how companies account for it, and the way in which we account for it for our internal purposes and MIs. Fat prices also and realizations will also have to go up significantly.
There is a slight accounting matter here. Different companies follow weightage for fat and SMP differently.
Sure.
And when you convert milk into powder and butter, yes, how much of milk cost you attribute to butter, how much of milk cost you attribute to SMP. That there is no standard here. Different companies have adopted different percentages of weightage. So we have given in a particular manner where the fat is shown generally in the negative trend, whereas powder will be showing in the positive trend. And we don't want to change accounting policy after followed a particular way for 2.5 decades.
Also, we believe that we'd rather be conservative in the way we account internally, so we are more careful about how we manage these commodities, and that's why it appears as something that's more loss-making consistently.
Sure. And just to clarify, what would have been the fat losses in the 9 months period versus, say, same time last year, of whatever full year last year?
For 9 months period, the fat loss, PBT loss is 33.67 crores.
Right.
Against corresponding 9 months, 14.2 crores.
Okay, last year was 14.2 crores, right? Yeah. Right. So one minor clarification, when would you be able to sell future retail shares, sir, according to the agreement?
It is in lock-in till March 2020.
Oh, March 2025. Thank you so much and best wishes, sir.
Thank you.
next question is from the line of Samir Kaparia from Rockstud Capital. Please go ahead.
Yeah, thanks for taking my question. My understanding is management has given a 6,000 crores of a revenue growth target by 2022, whereas if I look at your historical trend in terms of both milk as well as value-added products, your milk business has grown by 10%, whereas your value-added product segment has grown by 25% CAGR for the last 5 years, whereas overall your adjusted net revenue has grown by just 14%. So does the management intend to revise its targets downward? And if so, what would be that number be?
This is Brahmani here. 6,000 crores is definitely a target we will achieve. As mentioned earlier, this year though was an exceptional year of being relatively flat. However, we've shown strong growth when it comes to value-added products, and expecting the same rate of growth, about 10% in milk and 30%, 25 to 30% growth in value-added products, and the contribution of value-added products increasing from the current 25% to 40% in the next few years. We are confident that we will be able to achieve the 6,000 crore target. It might just be a year or so extra than what was expected earlier, but the target is clear for us.
At, around 10 to 11% kind of a growth rate in the milk and 25% growth rate, your sales would be coming at just around 4,000 odd crores. And perhaps that would be somewhere around 15% kind of a growth rate overall. Is that understanding right? And secondly, I understand that the company has already laid down the capex, but then in the initial commentary you had revised, you have slowed down a bit. Can you explain us a bit more in detail in terms of what kind of a capex the company is looking for, and what would be the revenues which would be generated from it? I understand management has given a guidance of 100 crores revenue per annum for the next 4 years.
Yeah, I think, yes, just to clarify, for the dairy division, around 100 crores is what we're looking at when it comes to capex. When it comes to the back end, when it comes to processing, as well as front end, the deployment of freezers, chillers, coolers, and other kind of capex. And to answer your question on growth, again, that's why we're looking at an extra year to be able to achieve our targeted numbers. And secondly, your realizations will also increase as the contribution of value-added products grows. And that is another driver towards achieving the number of 6,000 crores. We've been quite cautious about our growth, or you might also call it conservative sometimes, because we are more focused on our bottom line. We don't want to grow for the sake of growing. We want to grow healthily while protecting our bottom line, and that's been the strength of the company. That also reflects in the different operational ratios. If you look at return on capital employed, etc., that continues to be pretty strong because bottom line approach is something that's really important for us. So we want to be extremely healthy in the way we grow.
Yeah, I completely understand all that. Just wanted to get a perhaps, because this figure which I'm quoting to you, it's perhaps post your acquisition of Reliance Dairy. But then any which ways, I got your point. Other thing which I wanted to know is this revenue target which you have specified is for completely organic growth. You have not considered any inorganic acquisition for this revenue target. Is that understanding right?
Yeah, we will be quite opportunistic when it comes to acquisitions. So,
new target. So, the earlier call you had specified this is completely from an organic growth in your Qtr3 FY19 Concall.
Yes, it will be organic growth. And anything that comes will be in addition to this.
Thank you. The next question is from the line of Aniruddha Joshi from ICICI Securities. Please go ahead.
Yeah, thanks for the opportunity. Sir, in one of the earlier questions, you answered that the procurement prices will go up, but the selling prices may not go up because of the election and all this. So are you saying that probably we will have margin pressure in FY20, or at least in H2 FY20 we will have margin pressure, considering we will end FY19 on a very high note?
So there will be lagged extra time. If the procurement prices go up, sale prices will also go up. In certain situations, we will be able to pass on the increase immediately. In certain circumstances, we may take 1 or 2 months more to pass on. Because in these election years, cooperatives will hesitate and they will not get permissions from government to increase the sale prices. So we'll wait for certain things to happen and do. There will be certain delay in passing on the extra cost of that 1 rupee or 2 rupees. Meanwhile, in the coming 6 months, we have advantage of the summer coming in. The value-added products will grow at a higher pace and their contributions will be higher. In those items, we will be passing on the cost to the increased cost to some extent quickly. So that would neutralize or nullify the price impact substantially, and we will have some to carry on for a second quarter to implement. The election scenario should be over by June. The quarter 2 will be open quarter for all the cooperatives and private companies to look at the prices. This is purely some kind of pragmatic view we have to take during the coming quarter.
Okay, but I mean, in general, considering the expectation of increase in milk procurement prices, where do you see FY20 margins panning out? Whether it will be higher than what we are seeing right now, or it will be in the lower levels than current levels?
It will be lower because this year is an exceptional year where the glut situation has come and prices of farm gate has come down. So this is a kind of one of the exception here both ways, growth-wise and margin-wise. So we will be getting into normal rates most probably from the summer.
Okay, so last question, considering we have got additional profits this year, so what are the activities that we would have done to increase the moat in the business, that is to increase the connect with the consumers, that is giving some freebies like 10-20% extra grammage, or offering some value-added products, small value-added products with milk, or any such consumer offers which you would have done, or any increase in ad spend that you would like to highlight?
Nothing of that sort. We maintained our integrity of the pricing, and except in certain modern retail formats where passing on is possible.
Also, considering the season that typically Q3 of every year is, colder months and value-added products sell much lower, we did not aggressively push any promotions or discounts or any of those things, apart from what happens in the normal course of business. So there's nothing exceptional because it is long season to be spending on any of those activities, and any incremental benefits we believe can be temporary.
Okay, yeah. Thank you.
Thank you. The next question is from the line of Namit Arora from InGrowth Capital. Please go ahead.
Hi, the question was on the recent acquisition of Prabhat, and any impact, because there were some operations which were getting outsourced to that company. You can help me understand that.
We have exited from co-packing operations from Prabhat about 6 months back. We have tied up with some other company in Pune. Our operations are already out of that company.
Okay. That's all.
So we didn't have any insights.
Okay.
What is happening?
All right.
Thank you.
Thank you. The next question is from the line of Shraddha Sheth from Edelweiss. Please go ahead.
Good evening, sir. Wanted to understand your margin guidance. As you said, obviously this was a very good year because of glut and all. But also, as I understand, while we are not sharing Reliance Dairy numbers separately, but are we breaking even there? And, in the previous quarter, you did share the losses figures. So wouldn't that also be a buffer next year in terms of not, the margin shouldn't be coming down from year on? Because this year also has, some losses of Reliance Dairy.
It's not only you, even I am not able to hear that.
No, what I'm saying is, as you said to the previous participant, that the margins this year are very high and shouldn't sustain. But just wanted to understand, this year also had, some losses of Reliance Dairy, which might not continue in the next year. So wouldn't that be a buffer to the margin guidance next year?
Yeah, first thing I was just trying to bring up to you in an indirect way. Even I was not able to hear whether there was any loss. Because the numbers got seamlessly merged, and it is unfair on my part to say that profitable loss making. But at a superficial level, there are no more losses in any operation. We are able to, significantly rationalize the businesses everywhere, and the margins themselves speak of that. Coming to the guidance, yes, there will be the procurement price hike, and there will be some delay in passing on the price hikes to consumers through liquid milk, whereas through value-added products, we'll be able to pass on at the earliest. So there would be some amount of drop in the margins to the levels of a normal year.
Sure. So second, procurement, just wanted to understand, while we still say that we want to go to 28 million liters from current 13, 14 million liters. So just wanted to understand, this year we just had a 4% procurement growth year to date. So what is the annual target we are looking at? Since you said it will be from the existing states itself. So what could be the growth in procurement to reach our target?
The procurement growth of current year is a kind of decision not to actively pursue the volume increase by delaying commissioning of chilling centers, not going into more villages to procure more. As a caution, because of the glut around us, we could have got more volume, but we would have ended up in converting the milk into powder and butter and selling at lower realizations. So it was a kind of conscious call that we didn't want to grow too much in this year. We have not grown. In the coming years, if we want to grow procurement, we have enough triggers for growing volumes. At least 2 to 2.5 lakh liters a year we'll be able to add with the existing momentum.
Sure, that is helpful. So just on the capex guidance, just if you can reiterate what will be the guidance for the next few years.
Yeah, I think earlier the executive director had answered this saying it will be around 100 crores plus or minus 10 per annum in the coming 4 or 5 years, which would help us to achieve these volumes. The allocation of resources is again connected to the growth aspirations we have articulated.
Sure. And lastly, sir, just wanted to understand the 6,000 crore target in our earlier call. I think you had said this is along with our, erstwhile retail division. So is my understanding correct that 4,500 crore is the right target and not 6,000?
It was correct, but we have taken this additional 2 years to cover that gap of 1,500 crores. When we declared 6,000 crores as a company, dairy was taken at 4,500, retail was taken at 1,500. So when we demerged the retail to Future Group, that revenue of 700-800 crores, I think 700 plus crores was moved out of the Heritage Foods company. So we have to cover that 1,500 also and achieve the original thought of 4,500 to dairy. So to capture the entire 6,000 crores, we are now seeking additional time frame than reducing the targets. Because the moment I reduce the target, all the internal decisions like, capital allocation, geographical spread, team building, technology additions, all these things will get affected. So we are moving in the direction of achieving 6,000 crores. Required internal arrangements have been made. So we will only seek 1.5 year more. Again, it depends on the season. Suppose this year, if there was no glut and the price realizations are normal, we would have got our 20% plus. So I would have gained this year. Now I lost 1 year in the process. I'll be adding this year at the tail end. So if I want to make it clear, we are not scaling down the number of 6,000 crores or the demerged retail business. We are trying to take additional time frame to achieve that 6,000 crores.
Sure.
Which could be 1.5 year beyond 2022.
Thank you.
Thank you.
The next question is from the line of Bhargav Buddhadev from Kotak Mutual Fund. Please go ahead.
Yeah, thank you for the opportunity once again. Just one last question. So you mentioned that in Karnataka there has been a growth, but not in Maharashtra in terms of milk sales. But I believe in Karnataka also Nandini enjoys a subsidy. So how did we manage to sort of grow in Karnataka and whether this growth is sustainable?
In Karnataka, the policy of Nandini and government was to subsidize or to support farmers with 4 or 5 rupees per liter of the milk given to Nandini. 5 rupees per liter, Karnataka government gives to Nandini brand for the milk they sell to, they procure from the farmers. If we procure from the same farmers in Karnataka, we will not get the 5 rupees. We have to fund that 5 rupees from company. So there is no spread of 5 rupees per liter there. So what we do is we procure milk around Karnataka in the states of Andhra Pradesh and Tamil Nadu, we move the milk into Bangalore and sell. That is where we are able to withstand that competition and grow.
So Nandini is not very strong in Bangalore, is it?
It is almost monopolistic brand because no one else is procuring milk in Karnataka except Nandini with a 5 rupees support.
Okay. And sir, do you expect the growth in Karnataka to continue?
Yes.
Okay, sir. Thank you and all the best.
Thank you.
Thank you. The next question is from the line of Nitin Gosar from Invesco Mutual Fund. Please go ahead.
So just a clarification on the margin guidance. In past, we used to do a 5.5% margin. Then there was also a time when we used to do 7% EBITDA margin. And 5.5 used to come in a normal year, while also we have seen 5.5 when we acquired Reliance Asset. So what is the number to go by?
It has several factors. It's not a simple output. It has weather impact. It has national policies, state policies, international prices, global trade wars. There are multiple factors you have to evaluate to declare a number, and it is changing quarter by quarter, season by season, year by year. So we have to always take a range. It's maybe 6 to 8. Depends on the conditions. It can be 1% plus or minus. So we cannot pinpoint that it will be exactly 5.5 or 7.5. With our experience of the last 2 decades, we see dairy margins are fluctuating. It's not unidirectional like FMCGs. So we have to accommodate that fluctuation of 1.5%, 2% in the margins, season to season, quarter to quarter. It is not scientific or there is no model available to suggest this is going to be the year's guidance. But guidance is limited to a range, not to a point.
Okay. And according to you, the range could be between 6 to 8?
Yes.
Okay. And one more clarification. You talked about SMP loss of around 33 crore for 9 months this year?
Not SMP, it's a fat. Fat includes butter, ghee and cream. These are the 3 products. In our accounting methodology, they end up in losses, where the realizations would be lower than the cost of production. Because we attribute certain weightage for the fat in the milk. Okay. Then we take surplus milk.
Okay, but their losses would be higher versus last year because the realizations have been poor.
Yes, this year particularly fat prices crashed significantly compared to last year. Almost 25% drop in the realization of the fat during the current 9 months compared to last year. That has impacted the revenue growth also. That has impacted the bottom line also.
And in a typical year when the supply normalizes, the fat prices also normalize?
More or less, they come back to normal price, and then our losses would be there, but marginal. It won't be as significant as this.
Okay, so the previous year number, which was around 14 crore, could be the number to go by in a normalized environment?
That is a 9 month span.
Okay, got it, sir. Thank you.
Thank you.
Thank you. The next question is from the line of Dheeraj Mistry from MK Global. Please go ahead.
Yeah, hi sir. So only one question from my end. So what would be the curd sale for the quarter?
Dheeraj, you're not audible.
Hello.
Yeah.
Yeah, only one question. What would be the curd sale for the quarter?
As an average per day is around 270 tons for the quarter.
And value? Value
of curd. Just a moment. It's around 110 crores for the quarter.
Okay. Thank you. That's it from me.
Thank you.
Thank you. The next question is from the line of Sailesh Kumar from Sunidhi Securities. Please go ahead.
Yeah, thanks for the opportunity. I have a couple of questions, mainly housekeeping in nature. What is the EBITDA margin in liquid and value-added products on 9 month basis and Q3?
liquid milk and value-added products, EBITDA margin 9 months, right?
Yes.
Milk is 7.95%.
Okay.
Value-added products 14.96%.
Great. In the value-added product, what are the number 2 and number 3 largest products after third?
Buttermilk, flavored milk.
Okay. And what has been the revenue on a 9-month basis?
Yeah, we don't have right away. We'll give you later.
Great. And sir, we are showing some minority interest in our P&L. So if you could help me, where does this minority interest come from?
Sorry, could you repeat?
The minority interest, what is it attributable to?
Farmers are the minority. When they consolidate.
Okay. We have Farmers at Trust.
Okay.
Which has all the milk supplying farmers as members of the trust.
Yeah,
in consolidation, I think they become minorities.
Yes. What exactly does this trust do, Farmers Trust?
Oh, this is a kind of long version if you want to hear from me. There's a lot of things to empower farmers, to enrich farmers, to improve their productivity, quality of life, animal health, nutrition, health, vaccination, insemination. So we have a lot of activities which will engage farmers throughout the year for their empowerment and their well-being.
Yeah, it is also a large retention activity of milk procurement and farmer base, which has been extremely successful.
If possible, if you could give me the breakup of 66 crore capex that has been undertaken.
It goes into, I don't have right away, but it goes into milk chilling facilities creation, packing and processing stations, expansions, then market infrastructure like chillers, freezers, coolers in the market, and enhancing our capacities of effluent treatment plants, and internal ISO standard specifications to achieve some amount of upgradation. Replacement capex, where we have to replace certain aged equipment which was there for more than 10-15 years to get the new equipment in place. So the whole expansions and improvements, compliance requirements, replacements, and market side infrastructure for holding the stocks, cold rooms. Line item wise, I won't be able to give you at this stage, but all the activities that go into it.
And what has been our advertisement expense in 9 months 2000 FY19?
It will be around 1% of our revenue.
Okay. And one last question, if I may squeeze in, though you have utterly cleared the stance, what has been our procurement volume from the acquired business, which we have taken from Reliance? Because we have been right-sizing it for last a year and a half. So where has it now stabilized? And we believe it is properly integrated at this level. We need not tinker with it.
We have inherited from dairy life business 29 locations where milk procurement was happening through franchisee chilling centers. All those chilling centers we evaluated and now reduced them to 15 chilling centers to bring the viability, freshness, cost management, distance, etc. When we acquired, we were getting close to 2.25 lakh liters of procurement from them, out of which about 70,000-80,000 liters was going for a conversion plant for powder and butter. That commodity business we have decided to stop because that was not adding any value. As of now, it would be around 1,10,000 liters or so, the volume of procurement volume coming from those locations on an average. So we will now, what I have earlier mentioned, out of these 15 locations also, half of them are still in the hands of franchisees, half of them we moved out and created our own infrastructure. In the next 6-7 months, we will move out of the balanced franchisees and set up our own chilling centers. Then the growth will be built on these 15 centers, and possibly we'll add a few more at the right locations where we require milk for supporting the marketing and sales. So it's a kind of process going on. I have stopped monitoring these numbers because people are not getting data correct, that they are all integrated into normal movement of the operations. So we deliberately and consciously said, let us not discuss. It is creating a lot of confusion in the numbers. It has become stable. The purpose has served. We have entry into 5 new states. This has given good team, good infrastructure. We acquired post the acquisition. We have gone into one Vaman Foods asset near Chandigarh was acquired, which has 2 lakh liter capacity. And we have also expanded our acquired area near Sonipat to 2 lakh liters. So the infrastructure is now perfect. People are there, and growth will trigger from the coming season. Rationalization process is almost over, except these 5-6 chilling centers to be taken over by us for our 100% operations. This is where we are today. And I request here all the members to, dissect further into acquired business. It has become small. In a 14 lakh liter business, it is now around 1,10,000 liters and got integrated at all levels in the sales, procurement, processing, people. So it's a difficult task and unproductive task to monitor it separately and then present it separately. So it is integrated fully. It has become part of my body.
Got it. Thank you very much, Dr. Rao. You have been very patient and very generous with your explanation. Thank you very much.
Thank you. So, Shailesh, any further closing comments from your end or from the management?
We would like to thank all the participants for taking active participation in the call. We would also like to thank the management team of Heritage Foods that they have tried to explain the queries of participants in best possible way. Dr. Rao, any closing comment would you like to share?
Thank you very much for the continued interest in Heritage, all the members, and I'd be more happy to be more transparent and explanatory to all of you so you understand the business well and take a call on our business. As I earlier explained, this dairy has several impacts of seasons and policies and which are not predictable and consistent. There is a factor of fluctuation in our performance with the external factors. Internal factors, we are all very, very perfect and robust, and we continue to have the high aspirations to grow and deliver strong top line and bottom line, and we are hopeful of meeting you with a much further improved performance in the quarter to come. Thank you very much.
Thank you.